Welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Meghan Grebner. With me in the studio this afternoon is Scott Brown with the University of Missouri. Good afternoon.
Good afternoon, Megan.
Nice to see you.
Yeah, nice to see you in person. Absolutely.
Let's get right into it and talk a little bit about what's been going on in the markets this week. We had a shortened week due to the holiday. Any big movements that happen?
Well, so I think when you look at livestock markets, fed cattle prices down a couple bucks as we went through the week. Hogs also off a little bit. On the futures side, we saw hogs off $4 or $5. Some of those more deferred contracts. So some pressure, but by and large, not big changes. If you look at wholesale beef prices, they were pretty flat for the week, as were the pork cutout value. So not a lot of move in this shortened week that we've seen thus far.
I think one of the things, Scott, we really have to talk about is the volatility in the commodity markets. That's got to be fairly supportive to cattle producers and livestock producers in general to see those feed costs drop down a little bit this week.
Absolutely. When you look at corn, soybean meal across the board, it's been an amazing week for feed costs. You look back in mid-June and we would have talked about corn futures that were setting for new crop corn, 440, 450, that are now sitting there at 340. So losing $1 a bushel makes a big difference to the bottom line of pork and cattle producers in this country. On top of that, we saw big slides in soybean meal as we went through the week as well. So I will say it's a good news situation for livestock producers when you see the declines in feed costs, hopefully helping to offset what's been some lower livestock prices as we move through 2016.
And USDA definitely thinks that we have the acreage of corn there. And I would have to think some of the precipitation that fell through parts of the Corn Belt this week is got to not set the crop, but it's pretty close.
Well, a little bit of traveling in Missouri this week certainly shows that a lot of that corn looks very good, and it was certainly off to a rough start with some of the dry weather we had in Missouri. But when you see that we've planted, according to USDA, 94.1 million acres of corn, and now what's been some pretty timely rains across much of the corn area, it seems to me that the likelihood of a big crop hitting the bin this fall is increasing dramatically this week.
When we see that, and we see this drop in commodity prices, and we see also that decline in livestock prices as well, should producers maybe start to put things together to maybe manage risk and be able to lock in those input prices when they're a little bit lower?
Well, I do think it's important to be paying attention to those markets. I guess right now I would say in the short term from a corn perspective, it seems like there's a lot of negative and maybe not any big news coming out here in the next few months. But at the same time, you don't want to rest too long and miss the opportunity for what's some corn prices we haven't seen for quite a while. Now, I think we still have some pressure there and prices could go down. And I think you look at the soybean side of the complex and say there's some soybean price decline that could occur as well. But we do have to manage risk. I remind folks all the time that managing risk is very much like insurance. And just as we don't want to collect insurance on our house burning down, we frankly want to do a lot of price risk management that maybe we've made some type of payment for an option or we went straight in the market, but maybe we don't always want those payments. Too often I hear producers saying, I didn't get a payment because I exercised an option. I'm not going to do it again. And I go, that's kind of the wrong strategy. Think of it as insurance. And yes, we want to provide that insurance as cheaply as possible. But having no insurance is a risk management strategy, I say all the time, and sometimes not a very good one.
One of the things we've talked a lot about so far this year really is finding a place to put our product, exports specifically. We've got some numbers out this week for the first 5 months of the year. Let's talk a little bit about those and what we glean from that information.
Yes, I always first start by saying, it is going to be customers outside of the United States that's going to be where beef and pork ultimately go when we look over the next decade. We cannot continue to only be focused on U.S. consumption of these meat products. When you think about the number of folks in the rest of the world and the growing incomes that we expect to see there, that's really where we're going to have growth in consumption of U.S. beef and pork in particular. So we have to be focused on that. The data that we see for the first 5 months of this year, number one, some of the stuff that really jumps out to me is what's been happening to U.S. pork going to China, up about 150 million pounds for the first 5 months of this year relative to a year ago. That's a real positive. That may be why we've been seeing some strength in pork markets that otherwise might not have been there. You have to go back to 2012, I believe, to find another start that well. And when you look at what we did in the last month to China, have to go back, I believe, to 2008 to find a month where we exported as much pork to China as we had. So a big market for us, I think, from a pork perspective. When you look at the potential growth that's coming in the pork side, China has to be part of that equation, and Asia generally has to be part of that, the answer to the equation of what do we do with this increased pork supplies that's coming.
And as we see that median household income rise a little bit in those countries, that's got to be a good indication for U.S. protein and a place to put for our markets.
Absolutely. You put another dollar in the pockets of folks with lower incomes, and you know a larger proportion of that dollar is going to be spent on food products, whether it's a buy up towards meat protein and away from other protein sources, or just overall increases in consumption. All of those things probably spell some very good news for us longer term if that plays out.
As we look towards the end of 2016, does it also come into play looking for a market, especially as we look to grow the pork industry, and we're facing some increased pressure for some shackle space and some places to get that product processed here?
Absolutely. I will remind us all the time that we just can't be focused on U.S. markets. And when you think about what we're going to be doing in the fourth quarter of 2016, and I'll even go further and say 2017 and 2018, it's number one, nice that we're going to talk about some additional slaughter capacity coming online, but we also have to do something with that additional pork that we're going to produce out of that processing capacity. And that's where I think we have to be looking at international markets. If we have to back product up into the United States or aren't able to move as much product, then it becomes this struggle of at what price do we clear the U.S. market. The more supplies we put on, the lower the price it takes to clear. So it is critically important that we find those international markets and they continue to grow for us. And that's why you'll hear me on pork all the time talk about China as being very important. Large consumers of pork already. Small changes in trade for them could mean really big things for us.
Any other things that we need to focus on the demand side for our protein products here from the U.S. and maybe even domestically?
Well, of course, we always have to continue to put products in front of consumers they want. And I think we have to be paying attention to the signals they're sending to us in terms of meeting that demand that's there. Sometimes that's hard to know exactly what is going to entice consumers, but if you put products they want in front of them and they demand more of those products, it's all a win-win for us. So developing beef and pork products that better meet those needs, I think, is important. I sometimes will on the beef side talk about quality. I think the eating experience matters a lot on the beef side, and we've all had experience where it's that steak we might have consumed wasn't as good, and other times where it's been absolutely excellent. We need to minimize the lower side and maximize those good experiences so we can make sure consumers come back for both beef and pork. So I think those are important things as well.
And getting the product that they want in front of them.
Absolutely.
Let's talk a little bit. You've been spending some time around Missouri and talking to folks. As we look at the ag economy, we look at commodity prices, and we look at volatility, how does that translate into the financial sentiment, maybe how farmers and producers are relating to lenders? And what are some things that we need to keep in mind heading into the last half of 2016 and into 2017?
Yes, we're getting a lot of different information from producers around Missouri this week and next. And I will say you don't have to look very far at some of the data that's available to us. And I'll sometimes say a record net farm income in 2013 of over $120 billion that now USDA says for 2016 will be below $60 billion, to say we're taking some money out of agriculture right now. I will say that there are a lot of clouds on the horizon. It's early in the process, but when we've been listening to producers and lenders around Missouri, that there's certainly a sense that we have some folks who may struggle as we go through the remainder of 2016. I think when you look at the average numbers, it doesn't really show up. If you look at a debt-to-asset ratio that we could get from USDA on average, it shows not much change yet. I'm afraid the distribution around that average is a little scary in that we have a lot of very veteran folks who probably don't have a lot of debt at this point, yet you have a younger crowd that has been pretty aggressive in expansion of late and may face some more difficulties trying to make that all work as we look ahead. I've told producers, the market price risk is certainly there and sometimes tough to deal with, but I think we really have to pay attention to what the bottom line of these individual operations look like. Where do you fit relative to your neighbor? And when I say that, I don't mean the neighbor down the road. I mean neighbor anywhere in the world. We have to be cost competitive as best we can. And sometimes I think that's taken as, ag economists are saying, use less inputs. And I always say, no, that's not necessarily it. You have to look at the cost of that input relative to the expected value. And sometimes adding less fertilizer or using less herbicide may not be the right strategy if it hurts yields. So I think it matters for every producer to really evaluate where they sit relative to their peers. And we may enter a time where it's much tougher than we've seen for a period of time. I don't want to suggest that we're anywhere near the mid-1980s. I think things are very different than when we experienced that period of time. But there are things that make me concerned about producers. And when it comes to operating loans for 2017, what are some of the options that they're going to have available to them? Or are they going to find it pretty tough to find money?
We talk about, in terms of row crop production, figuring out your cost per bushel to better mitigate risk and to figure that in. What's the best way for livestock producers to take maybe that microeconomic aspect of it to get down to the nitty gritty to figure out how they can protect themselves and not, I don't want to say stop the bleeding, but prevent the bleeding from happening?
Yeah. So I'll give you a little different as I go around. For a cow-calf producer, what's it cost me to get that calf ready to go to market? And if I'm looking at selling right at weaning, or I want to keep them for 45 or 60 days, or I want to keep them over the winter, I don't care, but you've got to know the cost to get that animal to the end point that you think you're normally going to market at, and then look at where price is at. And sometimes I will hear producers say, look, I'm let's say $60 to the black on that calf, and so I don't need to do risk management. And I'm like, yeah, but that might be the perfect time to lock in that $60 return, because you may find when you get a month or two down the road and want to market that calf, that $60 in the black became a $40 in the red. And that's what we want to avoid. I think from a pork perspective, it's cost per 100 pounds. What's it take me to get 100 pounds of pork ready for the market? And that's where I think you can do that comparison to others. And I think those are the kind of similar things that we see happening on the crop side. And I think all the time it's important to remind livestock producers that things like crop insurance and ARC and PLC programs from Farm Services Agency are available as price risk or as risk management tools for crop producers. We just don't have the same thing in livestock production.
To wrap things up, Scott, anything we need to look at next week, reports that are coming down the line that we need to keep an eye out on?
Well, I'm really interested in see what USDA is going to do next week. We're going to get the July WASDE report from them early in the week. I know that they'll show the additional acres for corn that we got out of the June report, but what do they do to price ranges for 2016, especially given where markets have gone this week for both corn and soybeans? I think those are the big ones. I don't expect big yield changes from them until we get to the August report. That's normally when they first go away from trend yields. But when I look at the crop that we have out there, I'm wondering whether or not we're going to be above trend yield for especially corn at this point. So I think that WASDE may set the stage for where do we go on feed costs next week.
Scott, good to see you.
Yeah, good to see you, Megan, as well.
We'll talk to you next Friday.
Very good.
I'm Meghan Grebner for Brownfield.